Why do you need to know about GTO versus exploitive in trading? The GTO in exploitive trading or thought thinking is really commonly thought about in the poker scene. GTO, known as game theory optimal, it's a very mathematic, quantitative way of thinking. On the other hand, exploitive is much more observational, field based, unique to your environment. And why that's important, I believe, for the future of your trading uh, capital in the near term is that we're coming out of that tariff Trump volatility. And if we don't observe what is changing with the volatility intraday, you may make some decisions that you wouldn't otherwise want to make. I'm going to explain that a little bit more here in a second with some examples, but to review GTO versus exploitive trading, GTO again is very rule-based, algorithmic, systematic. We're looking to be balanced, more rigid and predefined, and we're less susceptible to exploitation. On the other hand, with exploitive, we're looking to maximize profits by exploiting weaknesses. It's discretionary, adaptive to your environment, and based on your observation, adjusting to the market, and can be higher potential when it exists. All right, well, so what's an example? So let's go look back at an era in that Trump volatility period with Google. Google, after earnings, this is around March, towards the end of March, was having a huge struggle on the higher time frame and was very weak. Well, on this particular day, after this consistent weakness, that Wix cybersecurity acquisition was released. It was for about $50 billion. And there's nothing really overly unique about this. I mean, it is pretty unique news, but when we combine it with the observations that we've made, those market environments, observations that we're making within the market environment, and then we combine the fact that there's a volatility spike potential with that Wix news, we can see that there's a massive reaction intraday to the downside, right? So we're using our observation about what the market environment is. We're seeing that Google is weak, and then we're noticing the fact that the Wix deal is going to drive volatility. Combine that all intraday, and we see that weakness again, and it could be strengthened in another environment, but right now it's weakness, weak, weak, and it just goes. And there's no real particular level here. Yeah, there's a VWAP, etc. Don't really want to get too into that, but the overhanging importance on this is that there was an exploitable opportunity because of the weakness and because of the environment and the news, and we combine that all together with the price action, Google's falling hard. All right, well, that's an example of exploitive. What about the other hand? Great. Well, we'll look at Meta. We'll start with Meta. Okay, Meta just reported earnings last Thursday, I believe, or maybe it was Wednesday night, Thursday, whatever. Okay, intraday sells hard. Okay, as we see here on that first bar. Same thing with the NASDAQ. But when we put the two together, which one looks weaker? Well, they both gap up, they both sell. But Meta opens, never gets above the open really, and just sells. NASDAQ goes above the open, ultimately closes lower than the open, yeah, but we can tell that Meta is weaker given the way the sellers took control during the day. Okay, well, why is that important? When we look back to our GTO trading philosophy, we're looking at where is it? I guess when we're thinking about GTO, we're thinking about being unexploitable, yes. We're looking to be balanced. There it is. We're looking to be balanced. And when we're being balanced, it's much more easy to be balanced when the market's just zigzagging, sure, not going anywhere. But it's much more opportunistic to think in that GTO frame when we notice there's an imbalance going on. Okay, well, why is that important? Well, because the way the volatility has been shifting over the past 2 weeks, we would say beforehand in that Trump volatility period, we'd say, oh, well, look at that weak bar. Look at that weak bar with NASDAQ. Ooh, Meta's ready to go down even more. Short, short, short. But the market has shifted from that exploitive to the GTO. Okay, well, if Meta is potentially in balance on the higher time frame, relative to the QQQ, is there an opportunity to think a little bit more GTO intellectually and play more balanced? I would say yes. Well, let's look at the price action then. All right, well, this is the wrong chart. Meta. All right, and again, so we're GTO, we're thinking more balanced. Here we are with Meta. It closes into the low essentially, looks really in control of sellers. Well, on Friday morning, it gaps up, gets back into that level, rejects once, gets up there twice, and then on the third time, we close above and push higher. And while I could spend more time on getting nitty gritty about this price action, I don't think that is the most important thing to talk about here. The most important thing to talk about here is the fact that it closes above, but also the fact that it's imbalanced. And then when we close above that level, I am personally not usually a fan of just buying purely off a level. But in this environment, when we look back to our GTO versus exploitive characteristics, we can see that one thing that's important, a few things that are important with trading in a more GTO frame of mind, is that we're often thinking more rigidly and predefined. We're much more rule-based and algorithmic, systematic in our thinking. And how does that translate into trading? Well, levels. Levels are a great way to look at it. And I see it, I put a higher time frame Fibonacci on it, and this is a good level intraday. We come into this level, reject once, twice on Thursday, come back in Friday, once, twice, third time, close above. And once we close above that level, it's not like we, have a perfect little hold here and go. It just goes. And it goes quickly, which I think is really important, because if you're not systematic and rigid in your predefined, goals and your vision and what you would like to see, then by minute 3, the price has already moved. On this 5th minute of the move, yeah, you would maybe buy this, but you would also be maybe a little hesitant because you'd want to see more of it holding, but it goes again, and it just goes all day. All right. So without getting too in the details with Meta and this price action, it's important to think about how we can be, again, more rigid, predefined, and thinking about how we can be more systematic in what we do. So when these opportunities continue to present themselves, as I imagine them to continue to, because this GTO way of trading, I believe, is just freshly arriving to the market, it's going to be important because this is the opportunity set that we're going to need to know how to trade and take advantage of. All right, this is a long example. So this is one that went to the upside. What about the downside? Great, look at Amazon. Reported earnings Thursday night, open Friday morning, and we get this big opening candle, okay? And then we have this very zigzaggy action. It really respects these fib levels that were drawn out. And then suddenly, until 11 a.m., puts in this interesting push. And the context of the day was the market was relatively strong. It wasn't really going anywhere with the NASDAQ and the SPY, but it was strong and it was going higher. And Amazon seems to join the party for a second. Well, it moves higher aggressively on volume. Looks great really. But then as we get into these levels, we are reminding ourselves of sort of that GTO thinking, okay, we're more rigid in our rules, our systems, levels, okay, the way we think, all right? And as it gets into this first level, it holds great, but we have to be aware of the levels that are still overhanging us. We're not breaking out to new highs during the day. And as we get into another fib level, all of a sudden, after looking really strong on the shorter time frame and all this good news on the earnings and stuff, boom, stock turns. All right. And I actually remember watching this intraday and thinking, okay, great, this could be a turning point. Let me wait for 1 to 2 more candles of it really proving to me the market is not going to come back up. Well, as you can see here, that doesn't happen. It just goes boom, boom, quickly pauses, but boom again, and it just goes lower and lower. Really aggressive moves what? a percent in 12 minutes. It doesn't really sound like a whole lot, but in this market volatility, it is. And it was a really good opportunity. And the way the Amazon and the Meta trades reveal themselves, where once they close off a level, a certain direction, with a certain sequence of events, they just don't give you another opportunity to get in on the trade, which is another reason why it's just so important, I believe, to be really systematic and rigid, predefined in what you're looking for out of the market right now. Because if you're 3 minutes late, that could be it. And that sucks because you may be, prepared and everything throughout the day. But when the time comes to make a decision and you're not ready, or you're taking too long to make that decision and it goes, well, that could be it for the day. And that's frustrating. So I think that's all the more reason why it's important to shift our thinking from that exploitative trading mindset to GTO. We're thinking in ways that are more rigid with our levels predefined. We're looking for imbalances, and instead of following those trends, we're looking to play more balanced ourselves and look for the other ways to trade. And we got to be ready to make quick decisions because we're going to be systematic and catch those moves with the market, so we understand that they may move fast if we're not prepared. All right, so that is basically what I'm looking forward to after that Trump volatility that we had over the past few weeks, really. And as we've rebounded almost 20% from the lows with the major indexes, this is more of what I suspect to see coming into the following weeks with how the volatility intraday will look and the trading that we can take out of the market to look. I hope this video was useful. It's something I'm going to be personally using, and I'll keep you updated on how the rest of the market performs and how it trades as we continue to go forward. Thanks for watching. This is Jude Cowie, and I'll see you in the next one.